What is going on, y'all? This is Pay Me in Dividends, and today is May 18th, 2025. Now, in today's video, I want to look at two ETFs that most of us are familiar with. I think it's safe to say that most of you are more familiar with SPYI, but there's another one on the market as well that is a bit newer than SPYI, and it is from TappAlpha, and it's called TSPY. And really the point of this video is to show you guys, just to give you guys a couple options of an anchor that you can use for your income portfolio. I know we love high yields, right? I love Misty just as much as the next person. I love XDTE. And I've been looking at some other ones as well recently, like Chippy from YieldMax and some other high yielding income funds. But I do think it's important to have that anchor in your portfolio. Now, for me currently, that anchor is QQQI from Neos, which basically deploys a very similar strategy like as SPYI, but it's just based off the NASDAQ 100. But today we're going to talk about SPYI, the S&P 500, and we're going to compare it to TSPY. All right, so I think starting off, let's look at the basics. So you can see assets under management around $27 million. You can see the expense ratio is 0.68, which is identical to SPYI's expense ratio as well. So there's no difference there. Now, where the difference does come in is obviously the dividend yield, right? So TSPY has a 15% yield, whereas SPYI has a 12% yield. But remember, these ETFs are meant to also offer capital appreciation. So you can see if I zoom out on SPYI, which has been out since 2022, it is green, all right? It hasn't gone up as much as the S&P 500 itself, but keep in mind that this is generating income for you and also providing a bit of growth. All right, this fund is not going to erode like many other funds. Same thing with TSPY. If we look at the overall chart since inception, it is red, but you just keep in mind that this has not been out as long as SPYI. The inception date on this one is August of 2024, whereas SPYI has been out since August of 2022. Now, these two ETFs, although they're both based off the S&P 500, they use different strategies. All right, so TSPY uses a 0 DTE, 0 day to expired covered call on the S&P 500, right, on the SPY ETF, whereas SPYI actually holds individual companies. So let's go down to the holdings, and you can see the holdings for SPYI are individual companies within the S&P 500, and then all they're doing is they're performing monthly covered calls on these individual companies. They're generating that option premium, and then they're paying you out that option premium in the form of a dividend. And if we go over to TSPY and we look at their holdings, they hold SPY, the actual SPY ETF. You can see it is the majority of their portfolio, and so they're not owning individual companies like SPYI and running covered calls on them. They just have SPY ETF. They're doing 0 DTE options on it. And that is how they are generating their income. So I think that's the biggest distinction between these two, and what makes TSPY a bit more volatile is the fact that they're doing 0 DTE options on the SPY ETF, as opposed to SPYI, who is holding the individual companies. But either way, you're on both ETFs, you're still getting exposure to the S&P 500. Now, if we look at the dividend payments, and this is one of my favorite things about Neos funds in general, is the payments are always very predictable. All right, so if we go back to 2022, we can see there's not much of a variance in the payments. All right, their first payment ever back in September of 2022 was 48 cents. They ended that year with a 46 cents per share payment in December of 2022. And then if we look at 2023, again, very, very predictable, not much of a variance. You pretty much know what you're going to get with this fund. And same thing with 2024. It actually looks like it's been increasing a little bit over time, but just keep in mind that these funds is all about how much income, how much option premium they're able to generate on that given month. So it's always going to fluctuate. The payment is never going to remain the exact same, but it's close enough, right? You can kind of predict how much income you're going to be able to generate based off of how many shares you have, because of the very small variance between distributions. And if we go over here to TSPY, and let's find the dividend payments, right? So again, they're paying 15% versus SPYI, which is paying around 12%. And same thing, right? So their first payment was October of 2024. Again, remember, this is a newer ETF compared to SPYI, but thus far, the payments have been very, very stable. We can see not much of a variance. The first payment ever was 29 cents per share, and their most recent payment was 28 cents per share. And you can see everything in between is very, very similar. All right, now as far as taxes go, I'm not a tax expert, but from my knowledge, NEOS, and this is the reason why I really like QQQI and NEOS products in general, is it is very tax efficient because they use a return on capital strategy in order to make those distributions tax efficient. Now, I would encourage you to do your own research and do a little more due diligence on exactly what that means, because I'm not a tax expert, but it is a bit more tax efficient if you have this in a taxable brokerage account, whereas TSPY is not as tax efficient. Again, from my understanding, this is something that I would encourage you to do more of your own research on. But nonetheless, I think both of these are great options as an anchor to your income portfolio, because it generates good income, right? Again, SPYI is around 12%, and it is paid on a monthly basis. And TSPY pays around 15% and is paid on a monthly basis. But it also offers that stability in share price. Now, as far as the expense ratio goes, this is higher than something like a VOO or a SPY or a QQQ. But keep in mind, guys, that they're generating income for you. Now, you can do this on your own, right? You can do exactly what SPYI is doing or what TSPY is doing. You could buy SPY ETF and run covered calls on it, or you can buy shares of these individual companies and run covered calls on it. But it's going to take a lot of money, right? Because we all know one contract for a covered call is 100 shares. And so it's going to take skill, it's going to take money, it's going to take patience. So just keep in mind, when you see these higher expense ratios, it's because they're managing, they're basically managing your options for you and paying you out the premium in the form of a dividend. So it's a very, very, very passive investment for income investors. And so I think that is worth noting when it comes to the expense ratio. Now, one more thing I want to show you guys is I want to pull up the chart. All right. Now, again, TSPY is still very new, so we do not have tons and tons of data, showing its performance. So this only goes back to August of 2024, which is TSPY's inception date. Although SPYI has been out since 2022, but since inception, you can see that they trail each other pretty closely. There's a gap right here where TSPY outperformed SPYI, but here you can see as of recent, they've kind of closed that gap and it's very similar. Although TSPY, from an annualized perspective, has actually outperformed SPYI since August of 2024. So you do what you want with this information. As of now, TSPY has outperformed since inception of TSPY. But if you're looking for something with a bit more history to it, a bit more, just history and a bit more proof of concept, SPYI may be a better move. It also seems like it's more tax efficient as well, possibly a bit less volatile than TSPY, but I think you can't go wrong with either of these. All right, if you're looking for something to anchor your portfolio, I don't think you can go wrong with either of these. So you guys let me know in the comments, what's another good anchor for your portfolio when it comes to the S&P 500. Again, I'll make another video on the NASDAQ and a few income ETFs that you can use, like SPYI, in order to anchor your portfolio and have that stability while you're still generating income. So you guys let me know, SPYI versus TSPY versus, you guys let me know the other one that you have on your mind in the comments. And here we are, pay me in dividends. I always appreciate you guys tuning in. We're around 1,800 subscribers, 86 videos. It's crazy. I've been trying to put out as much content as possible. You guys also let me know in the comments, is there a specific ETF or stock that you want me to cover? So as always, I appreciate you stopping by the channel, and I will catch you in the next video.